Bangladesh has seen quite robust growth in the year that is about to finish. This is June 2010. We expect that it will finish with growth of about 5.5%, which is quite good in the prevailing circumstances in the world economy. Now, this robust growth has been driven by consumption primarily, as in the past, and in turn, that is thanks to continued booming remittances, which have grown 17 to 18% compared to last year. In addition, there has been an improvement this year of implementation of public investments, so that is added to the demand that is available to cater to faster growth. Other positives that have been seen in Bangladesh this year include a pleasant increase in revenue, more or less on the lines of what the government expected, and that has been partly again thanks to the improved implementation of the development program. Another positive has been an improvement, a substantial increase in reserves, which of course is a double-edged sword, which I will come to in a bit. Now, so while this 5.5% growth is good, as always, as economists, we always have some concerns. So what do we see as growing concerns or concerns that are coming up during the last fiscal year, and that may probably continue to play out over the next fiscal year? Well, the first and foremost one is energy, and this is evidenced in shortages of power, load shedding, and driven largely by gas shortages. Bangladesh is an economy driven highly by gas, by consumption of gas, which drives the power and electricity. It's also evidenced in increasing air freight, resort to air freight by garment manufacturers, which is very costly, and it happens because they cannot produce the goods in time, and therefore they have to resort to air freight, which means that they cuts heavily into their profits, and there is a lot of idle capacity in production, and there is a cost to all this, even to the budget, because as energy prices are going up, we know worldwide energy prices have been going up, and domestic prices have stayed more or less constant. This means an extra load on the budget by way of subsidies in the energy sector. So this overall situation is one of concern, both from a public sector point of view as well as from a private sector point of view. The second major concern is on inflation. Inflation was about 9% in February, year on year. That means February 2010 compared to February 2009, overall 9%. But in food, it was even worse. It was about 11%. And given that Bangladesh is an extremely poor economy, I mean, a lot of poor people, this is of concern to us, because poor people don't have indexed wages or any other income which is in some sense resilient, so they get hurt. And so this is obviously caused in Bangladesh. It depends a lot on domestic production and in agriculture. It depends to some extent on prices in India. India prices of food have been going up quite a lot. So there is some concerns on overall inflation, particularly food. If international prices do start going down later in the year, then Bangladesh will be helped by that. The central bank has a difficult role in this particular situation. It has been trying to accommodate higher growth because of the financial crisis, and so it has been pursuing somewhat loose monetary policy. But it has a difficult decision to make in this context. The third issue is competitiveness, as evidenced in the central bank having to accumulate reserves because of excess inflows thanks to remittances. So there's surplus or greater than 2% of GDP surplus on the current account. And so therefore the effective exchange rate of the taka is going up, and therefore this is hurting Bangladesh's competitiveness. Now, the only sustainable way to tackle this in the longer term is to have a structural reform agenda, so that prices are going down, so that prices that the private sector faces, like say, for example, on energy. I mean, all sectors have to be competitive. There has to be business deregulation in a sensible way, and other structural reform measures have to take place. So there is a whole competitiveness and structural reform agenda which comes out of this issue, i.e. that there is the effective exchange rate is going up. Now, what do we see for next year, for fiscal year 2011? Well, energy will, as in the past, continue to be a key concern. So energy is a short-term issue. It has a lot of long-term issues. And there is no quick fix on this. The government is trying to get in some private power capacity, pretty expensive rental power plants and so on. But we do not see that this will be able to solve the problem of major shortages, especially in times of peak demand of energy. The second issue is consumption, where we are somewhat concerned because although remittances have done pretty well so far, as I indicated earlier, net migration, the growth of net migration has been slowing down. That means more people have been coming back and lesser number of people have been going out. Therefore, eventually we suspect that there will be a lagged impact of this on inflows of remittances. So this is something to worry about because consumption, as I said earlier, has been driving growth, and it has done so in the past few years as well. So overall, our take on fiscal year 11 will be a growth in the range of 5.5% to 6%. Bangladesh has been a robust performer, therefore this still remains, by international standards, a pretty good growth rate. But we expect it, if the energy issues don't get solved, and they won't get really solved, but addressed on a war footing, we expect that the growth will remain towards the lower bound, that is towards 5.5%. And finally, I'd like to say a word on one issue that affects the longer term as well and has a potential to be to do a lot of good for Bangladesh, and that is on the recent memorandum of understanding between India and Bangladesh, which had agreements in the range of trade, connectivity, power sharing, and so on. If this is implemented, then it can help Bangladesh to relieve its energy constraints, it can improve its exports, it can improve revenue from goods traffic, connectivity, goods traveling through Bangladesh, and it can increase the level of sustainable GDP growth that Bangladesh